equity curve that I built using a totally free strategy available in Strategy Quant. Hi, if you're new here, I'm Lisa, an algorithmic trader, and today we are going to test the range breakout strategy, which is a totally free template available in Strategy Quant X software. If you're not familiar with Strategy Quant, this is pretty much a software that can build strategies for you without needing to know how to code for MetaTrader 4, MetaTrader 5, TradeStation, multi-charts, and a whole bunch of other stuff. So this is what I'm going to be using today. So when you open up the software and go over to Algo Wizard, you are presented with this screen here where you can create a strategy yourself. Today, I'm not going to do that. We're going to use one of the ones provided totally for free. So this one here, the range breakout, and it says, according to the rules here, the range is defined by a number of bars in the past. Enter long when the price breaks out of that range, enter short when the price breaks out of the opposite range. So let's check it out. I'm going to click on open, and you can see this is the logic of the program. It's a little bit complex, so I will try to explain it in my own terms with a drawing. And one more thing, so if you click on variables up the top here, you will see these are the key variables that are used in the logic of the program. So the hour that it trades starts at 1300, which is key. The range of bars is 50. The offset pips is 10. And this signal is valid for 90 bars. So let's take that information and show it on the charts. To illustrate the logic a bit better, here is my very bad drawing of a bunch of random bars. Imagine these are open, high, low, close bars that you see in any trading software. So some bars are bigger than others and some bars are smaller than others. So the first part of the logic is that it is executed at 1300. So let's draw that in. At 1300, the robot will go back 50 bars. So if we draw a box around the last 50 bars, up here is the highest price of the past 50 bars, and down here is the lowest price of the last 50 bars. What the strategy then does is it goes and places a pending order, which means it's not going to take a buy and sell trade right now. It will place those trades and then they will be executed in the future. And so now we're looking at the range of 50 bars here, and it's looking for the biggest bar. And here you can see this is the biggest bar. So the bar size lets you determine the distance between the take profit and the stop loss. So let's say we were to place a buy trade here. This bar size would give you the distance to the take profit and the stop loss for both the buy and sell trade. And where would you place this buy trade? So again, we're going back to this box here. We'll find the highest price and we add 10 pips to it. So that gives you the location of the buy price, and the lowest price minus 10 pips gives you the location of the sell price. And because this is a pending order, we want to have an expiry date on this pending order. So the strategy has it set to 90 bars. That is the strategy in a nutshell. Let's take a look at its behavior on MetaTrader platform. Here I've got the MetaTrader platform up running the strategy tester, and I've got it running on the US Japanese yen on the 1 hour time frame. And if I take a look and try to find 1300, which is when they execute, the strategy is executed. So it is this bar right here. So at this bar, it executes the logic. So it goes back 50 bars. And it looks for the biggest bar. So this one here is the biggest bar, which is about 17 pips. So here now you can see it's gone off and said, okay, well, this is the biggest range. So I'm going to add 10 pips to that range and then place a pending buy trade. And the size of the take profit is, about 17 pips. And to the size of the take profit, about 17 pips. And here is the stop loss. The size of the sell trade to the stop loss is 17 pips, and to the take profit is 17 pips. So now it has been about 7 bars since it has put the pending order. This one will be about valid for 90 bars. Before we go on, let me tell you about the sponsor of today's video, Trading.com. So they are not a prop firm, but a way to get hedge fund capital and get paid along the way. And if you're familiar with the prop firm industry, usually they have like a million rules designed to make you fail. But since Trading.com is not a prop firm, they don't have silly rules like trailing drawdowns, daily drawdowns, time limits, rules on your trading style. They just have two rules. The first rule is don't hit the maximum loss of 10%, and the second rule is you get moved up to the next stage when you hit the 20% profit target. That's it. So there's 3 different account types you can choose. Let's pretend you choose to go with the $1,000 option. There's a total of 5 different stages. You start at stage 1. And when you make it 20% profit, you receive 1.6K in payouts and you move up to stage 2. And every time you make it to the next stage, you get more money and more payouts. So the last payout is 20K, where you're eligible for hedge fund capital. If you're interested to start your journey to managing real money in a real trading account and get paid for it, then the link to sign up to Trading.com is below. And thanks for Trading.com for sponsoring this video. We are in strategy Quant now, and what I'm going to do is save this range breakout SQX file. So I go to save in the top left under files and save to file as. And this is the custom workflow that I have created to test any ideas. So you can see it's fairly simple with just 4 steps. The first step loops through multiple instruments and multiple timeframes. So if I wanted to test this particular strategy on the Aussie CAD, the US Japanese yen, the pound Japanese yen, gold, I can do that all automatically without having to click and do it a billion times using the retester function. And I've already run this previously, just covering 2 years to see if this concept is profitable and if it's logically sound. So I ran this over 2015 to 2016. So we can see I ran on the Aussie CAD, the pound Japanese yen, the US Japanese yen, gold, a couple of indices, and all covering the same period. I am including swaps and slippages according to the IC Markets MetaTrader broker. And if we take a look at some of the mini equity charts just covering the 2 years, we can see it does seem to potentially work on the pound Japanese yen, the US Japanese yen, and maybe on gold. So this is just 2 years. Let's expand this data and see how it performs on a much bigger timescale. Rerunning this strategy from 2023 up to the end of 2022 on the pound Japanese yen does not look that good. Next, running it on gold. Unfortunately, my broker only offers data from 2016, but even from 2016 to 2022, it's a pretty average strategy. Now we are looking at the US Japanese yen, and this one does look quite promising. So from 2003 all the way up to 2022, we do see a generally upwards curve. Is it that good? Let's check out the Monte Carlo results. Now I've switched to a different software. This one is called Quant Analyzer. And if you're not familiar with Monte Carlo, it's a stats method that was borrowed from stats, and we applied it to the trading world, and it pretty much gives you an indication of what is likely in the future. So here I'm running the randomized trades order with resampling method, which means it duplicates some trades, it removes some trades, and it mashes them all up so we see a different type of equity curve compared to what we saw before. It also takes randomly skipping a bunch of 1% trades. So just in case your broker does not execute a particular trade, what would the likely future scenario look like? And overall, the equity curve is still slightly up. There is some unprofitable strategies when you do run it through Monte Carlo. So let's take a look of the results from a confidence level perspective. And here at 95 confidence level, you are trading at, I think, 0.1 lots or so. You are likely to get a return on drawdown of about 1.3. As they say in the strategy quant world, this is an interesting strategy. And the strategy comes totally free with anyone who has a strategy quant, so you can take it, make some tweaks, and test it on a whole bunch of different instruments. What you saw here was not me sitting there and rerunning the strategy again and again multiple times on different currency pairs and different time frames and different instruments. I have automated all that within the strategy Quant, relatively easy with just a few lines of code. And if you want to see how I was able to master that in only about a week of having strategy Quant, then watch this video right here. Thanks for watching. Bye.